Welcome viewers, we have come again to discuss consistently profitable trading. Once again, consistently profitable traders are trend followers because it is the least stressful of all types of trading. Think about it. If you are following the trend, actually you are going with majority of the participants who are pushing the market in one direction with them. That's why trend following is far easier. It isn't as if you won't make money by taking a contrary position. There are contrarians who actually made good money, but they are few and far between. Contrarian trades are appealing, yes, but they can give you a lot of stress. They can actually deplete your capital in a very big way. So remember this, much easier route is to become a trend follower. Trend followers are consistently profitable traders. We can't say that, but consistently profitable traders are trend followers. And to be consistently profitable trader, not just trend following, we have to do a lot of things. Today we are going to discuss all that in more detail. It goes without saying that a person who is a consistently profitable trader, he is in the market. His longevity is ensured because he is already trading profitably, and that too consistently. It means every quarter his profit and loss statement or income statement shows net he has made money, he or she has made money. So a consistently profitable trader is already ensured his or her longevity. But this is the effect, this is not the root, or this is not the cause. How do you ensure that you would maintain your longevity? You would be a consistently profitable trader. To be a consistently profitable trader, what you have to do, you must do, is to ensure that you don't lose your capital. You should always focus on preserving your capital. If you preserve your capital, you ensure your longevity as a trader. Then you will be in the arena. If you don't, you will be thrown out of the arena, let alone contest. You will be thrown out. How would you contest after that? You are not in the ring anymore. So remember this, that you need to preserve your capital. Whatever it takes, you have to do it. A large number of consistently profitable traders are technical traders. If you are a technical trader, that means you are timing the market. And if you are timing the market, in that case, you need to do two things right. First, you need to know what to enter and when to enter. What to enter means the stock or the counter, stock or index, stock or the commodity, what you are entering into and when to enter. Mind you, both the conditions should have to satisfy, meaning that your what to enter is also right, what to enter is right, and when to enter is also right. Both the things together, if they are right, then your probability of making money goes considerably upwards. You need to do this on a consistent basis, that you are choosing the right stock. If you are choosing the right stock, you have chosen a stock that's a great stock, great company, that is very good, performance is so good, but it is already overstretched. Valuation is overstretched, top heavy. If you enter on the long side into that stock, for your trade, you may actually, even if you are choosing the right counter, you are not timing the trade right. You may say that it is still going up, that's why I am entering. But after a certain point, if you have to enter in mid-trend, then you need to wait for a correction, and then in that correction if you enter, that becomes much safer. I am not saying that is the right trade or something. Sometimes there is a one-way traffic in for certain stocks where liquidity is very small, it shoots up. In those cases, I would suggest a different thing. So remember to choose the counter right and choose the timing right. Why? If you choose the counter right, when the time comes that this right counter is offering you a low risk opportunity to enter, you have the capital at your disposal which you can deploy in this. We have talked about trend followers as profitable traders. Mostly the consistently profitable traders are trend followers. But now we are in a situation where the long-term trend is up, but in the short term, suppose your trading horizon is short term, and within that short term span that is say about a month or so, what you notice is that lot of noise, lot of zigzag movement, no clear direction. In that case, what you should do, as I said, what to enter, when to enter. So the stock that you are trying to enter, perhaps it fails in the first question, that is what to enter. This stock is not giving a clear picture, or this counter is not giving you a clear picture of a particular trend. A short-term trend is not up, hence you are actually giving it a go buy, because when there is a clear picture, when that presents a low risk opportunity, then you can think of entering. So you need to have a clear grasp of what kind of a situation you are in. Accordingly, you will take your action. At the time of taking the trade, you need to do certain things, especially the prior evening or the little time that you get in the morning, but you must have a scenario building. You must ensure a scenario building activity as to what can possibly happen. A, B, C, there are several possibilities that you enlist. Your job is not done. For these A, B, C, what are you going to do? What would you do after this for this A, B, C? Why am I telling you that? It is precisely because if you don't do this, then a certain situation happens in the market and you are totally at a loss. And you have to take an action. You know what happens? You will take an impulsive action, and impulsive actions mostly results in losses. You are not quoting losses, right? So, scenario building the prior evening or the next morning, the morning of the trade, whatever time it takes, you have to do it so that you understand. That's why the number of trades you take and the number of counters you keep open should be limited. We have already done a video as to how many stocks you would trade at the maximum. Watch that, you will know in full detail there. But this scenario building is very important. Most traders dabble with technical analysis. Technical analysis doesn't mean that you have to be, it is not something like a sure thing. Lots of people, when they come to the market, especially the amateurs, they actually feel that there is some no sure thing kind of a stuff. There is nothing absolutely sure that you can do. Now, you need to study and understand technicals so that you get an objective picture from the price and volume action, and this picture gives you an idea, an unbiased idea of market structure that you develop, on the basis of which you take a trade. And this trade, when you take, it is guided by something, it is, you have aided yourself the knowledge as to where the low risk trade exists, as to what level if it goes, so that you get a low risk trade, and then you can enter so that your risk is so small and the profit opportunity is so big. That is very important. So technical analysis would help you there. Finally, one thing you must remember: the disciplined traders, the profitable traders, that is the professionals are always focused on risk control. Risk control should be your mantra. This is the first mantra if you have to become a profitable trader. If you do risk control, everything else falls in place. Your execution would be good, because you would actually be able to find low risk opportunities. To become a consistently profitable trader, you face a yogi-like question. I mean, those who become a yogi, especially the Vedantins, they are asked to seek an answer within themselves. Who am I? Similarly, a trader is also faced with a question. In the market, what is in your control? Say, suppose you will notice such situations that everything is going haywire and you are totally at a loss. But you will not be totally at a loss if you know that what is in your control. Now, if you do a little bit of analysis, little bit of contemplation, you will get to understand that there is nothing in your control. You can't control anything. So if you can't control anything, then what are you doing? How would you trade? What is in your control? Yes, there is only one thing that is in your control. That is, how would you react? What is going to be your action in the market? What is going to be your decision? Your action, your next step, that is only dependent on you. So if you have control over your actions, then only, just think in this manner, that if you, on the contrary, taking actions by yourself, if you are dependent on others, then the control is elsewhere. Control is elsewhere, and if you start blaming others for whatever has happened, then also you have ceded control. So it is your action, and that action has to be a guided action, in the sense that your understanding of the market, your identification of a low risk opportunity, all that over which you have some control. But you cannot control market movement, you cannot control any particular event that is taking place in the market or in the society or in the country or in the city, nothing. So be certain that you ought to have a discipline. Discipline of what? How would you bring in, if we mention the word control, it reminds us of discipline. It reminds us of discipline. This discipline actually would help you identify, or it would give you the ability to sit for a low risk, high opportunity trade. Only then you would be able to generate the kind of returns that you would like to generate, and you would be on your way to a consistently profitable trader. After discipline comes full responsibility. If you start blaming others, if you start blaming television shows, if you start blaming business newspaper, if you start blaming, say, your advisor or some periodical that you have studied, then you have actually ceded control, you have given away control to them, and by doing so, you will never be able to enter at the right time, choose the right stock. So, how can you take the right choice? How can you make the right choice, take the right step? It is by taking full responsibility. Full responsibility you have to take for your trades. Only when you take full responsibility, you understand that what if it's to be, it's up to me, and you are studying, you are understanding, you are developing a view of the market structure at the moment, and accordingly you are taking your decisions. So, full responsibility for a profitable trader for his trades, his or her trades, are a must. Well, so we have underlined discipline, we have underlined that you have to be very good in identifying low risk opportunity, and that ensures your capital preservation. But now what do you need to do going forward? Good stock picker and good stock trader are two different persons normally. Good stock trading and good stock picking are two different talents, two different skills. Normally you won't find both of them in one person. Of course, exceptions prove the law. In our country, we have got exceptions, especially Mr. departed great trader come great investor RAKESHjhunjhunwala is one such example, but this is not found elsewhere. At least I have studied about so many markets, so many traders. Very rarely I have found that kind of a person who is good in both. Anyway, to become a consistently profitable trader, keep all the things that we discussed today in mind, execute, study them, and then execute them properly. You will be on your way to be a profitable trader. I have been receiving a lot of comments, not just through YouTube comments, but also in WhatsApp, in Facebook, other places, through also on telephone, and I am trying to incorporate them. Continue watching my videos. If you like them, press the like button, subscribe to my channel, and also do not forget to press the bell button.